Talking about the agri space then, we have Vijayaraghavan, the Agri Analyst at IDFC Securities, joining in on the sidelines from the IDFC Investor Conference. Vijay, hi, thank you very much for taking the time out this afternoon, and hope you're having a good conference as well. Wanted to start by asking you about your view on a stock, say something like a Jain Irrigation. It's been in news for a lot of, fundraising, etc., that they've announced in the past couple of weeks. Your sense on the stock, if you look at it?
Hi, very good afternoon. Jain Irrigation, if you see, as such, irrigation is a big opportunity, but obviously the company has gone through its own issue with the balance sheet and the working capital management. So business-wise, there has not been an issue. It's been the balance sheet which has been plaguing the overall profit performance for the company, which they are trying to repair now. So obviously, I don't have coverage on Jain Irrigation, so I would refrain from commenting on it.
All right, but coming on to another stock, I don't know whether you have the coverage on that or not. Kaveri Seeds, now that one's been a rank underperformer, down 46% for this year itself. We spoke to the management today and they did say that they've cleared all the dues to Monsanto up till 2015 as per their agreement. What do you think is a kicker or trigger for Kaveri Seeds going forward?
So for Kaveri, obviously this year the performance has been impacted because of two reasons. One, obviously it's monsoon related. The cotton acreage has been down on a year-on-year basis, and because of this poor rainfall, farmers also have done down trading, because of which there has been lower sales of hybrid seeds in the other crops as well. And obviously the other issue has been the royalty which they have to pay for Monsanto, wherein most of the seed companies, large seed companies, have taken a stance that they want to pay as per the state government notifications. So till FY15, all the cotton company, most of the cotton companies have cleared the dues as per the agreement what they have got into Monsanto. It's only for FY16 they got into tussle with Monsanto regarding the royalty payment issue. So this obviously is now under litigation. So the companies have to go into arbitration and get this issue resolved. But purely from a business perspective, if you see for them this year, they have seen a decline in cotton seed sales volume, which should improve from next year onwards, because obviously some of the market share gains what they have planned for will play out over next 2 years. Some of the new products which they launched in cotton has been gaining traction, and there has been a good response among farmers. And even in the non-cotton crop segment, hybrid corn and hybrid rice has been doing pretty well for them. So all the three crop segments will do well for them from next year. So in my view, from a top line growth point of view, this year whatever the decline that we've seen in Kaveri will be one-off, and they'll be able to get back to the growth trajectory from next year onwards. So it's only the earnings which we have to see based on the outcome of what is going to be from the royalty issue, what they've been facing with Monsanto. So overall top line we don't see any risk, and the bottom line will depend on contingent upon the outcome of the issue with Monsanto. So this stock, I would suggest that people should wait to do bottom fishing, and to stock price fall in the recent 55% in the last 6 months largely factors in these negativities, but still it will lack triggers for next 6 months. So I would wait for the clarity to emerge in the royalty issue, and then would like to chip in the stock.
How much lower do you think that Kaveri could go from this 400 odd level?
See, this is almost, as I said, the last 6 months the stock has fallen 55%. So this largely factors in the negativity. So there is downside is limited in this stock for now. So I would say like 10% is the maximum downside what you can see in this stock. But the problem is the upside. So the upside for that you would lack trigger for now. So which in my view, only when the issues get resolved, so then only you'll see the stock price performing. Till the time these uncertainties, as long as this uncertainties lingers around, so you will not see an upside in this stock.
All right, and then coming to the stocks that you do have coverage on, you have an outperform rating on both UPL and PI Industries. Both the stocks have surged about 25 to 30% from the start of this year itself. How much more do you see an upside on these counters?
So for UPL, still I see there's more than 20% kind of an upside from these levels, and even PI will be a compounder of 12 to 15% from these levels. So both these businesses, if you see the investments what they made in the last decade is set to pay off for them, and it has just started paying off in the last 3 years, and I expect that this will play out for over another next 5 to 8 years as well. So it's a really a long-term compounding kind of a story. So say like in case of PI, the business model what they built around in both in the domestic market and the exports business, completely led by innovation, which is like the new products in the domestic market and partnering with the innovator companies in the exports business. So it's going to play out for next over 5 years, and which is visible in their order book build up in their exports business and the new product pipeline in the domestic business. So that's how PI Industries will see growth of 12 to 15% on the top line and 18 to 20% earnings CAGR for next 3 years. And even in case of UPL, if you see, this company has over the last 10 years has done a lot of acquisitions which has helped them gain market share, market access across the world. So now they have access close to 70% of the global agrochemical market, so which is tough to replicate for any other company now, because getting distribution access and registration in some of the markets is very tough, which UPL has done in the last 10 years. So those acquisitions and registrations have now started paying off for the company, and now that they have started focusing more on organic growth, even the working capital and the other balance sheet metrics are set to be much more stable, and we'll see only improvement going forward. So at 12 times UPL looks very attractive as well. And as such, as I said, despite last 6 months, if you see 6 months to 12 months, globally for agrochemical industry, it has been a very challenging times. But even in that time, for UPL has delivered a volume growth of 12 to 15%. So that shows the robustness in the business model what they've been built over last 10 years.
Okay, fair enough, Vijay. We leave it on that note. Thanks very much for joining in and talking to us.